From what you've read so far, was there any upgrade or downgrade even to the Bank of Canada's assessment of the US economy?
Well, they're sort of banking on a spike in exports, which of course is an interesting prediction given the climate right now. The options heading into today really were sort of one widely presumed option that we had here, which is a hike with a reiteration that future hikes will be gradual. The bank is trying to sort of respond to an economy and stronger inflation by moving, but of course trade winds or trade risks are posing a headwind for them right now, and so the pace of those hikes, of subsequent hikes, is the real question mark, and they look to be sort of gently pumping the brakes a little bit on that. And so we'll really see. I mean, they've talked about being data driven. That is another way of saying they're taking Trump more by what he does than what he says, and given that he says a lot, I guess that's their really only option.
Yes, the statement didn't apparently introduce any new dovish language, officials just reiterating that rates will need to rise further. But Canada exports 70% of goods south of the border. So what in the statement do we see about the potential for NAFTA negotiations and how that might hit the economy?
It's a good question. I think we'll hear more about that later today. NAFTA negotiations, as you know, are really on hold. We haven't had any of them in about 4 or 5 weeks. Mexico's election on July 1st tripped that up. And so we'll see where those go. U.S. midterm elections are looming, and a lot of people are wondering what window there really is to get a deal before then. There might be one, but the Bank of Canada wasn't going to get a lot of information in the last 6 weeks on NAFTA that would have allowed them to make a clean call here. But they do have an economy that's running up against capacity, in particular on manufacturing, a key export sector. Oil is strong. Canada's a big oil exporter, so a lot of people were saying that even with all the risks with Trump and Canada, be it tariffs that are already in place or the potential of NAFTA collapse or the potential of auto tariffs, they really had not a lot of choice or even no choice but to raise rates, given that the economy is doing so well here.
And Josh, talk to us about the knock-on effect of potentially the commodity volatility that we've seen today. We're seeing oil falling at the moment on the back of the concerns surrounding the trade ongoing issues with China. But is that something that's going to be playing into the central bank's viewpoint?
I think so in the longer term, but Canada's been suffering with a lower oil environment. The oil in Canada tends to be higher cost to produce, and so we've seen sort of since the 2014 slowdown and not a lot of juice coming from that sector. And so I think that they're watching it. It's a key sector. It's a major export, in particular to the U.S., which receives pretty much all of Canada's exported oil. But the price is at a point right now where no one was popping champagne to begin with. So I think fluctuations are to be taken in stride.